What is up guys, my name is Ignas, welcome back to the channel. So I've checked into the weightings for the dividend portfolio, and there is one market sector that we are currently lacking exposure into. Right now we have $2,414.59 in consumer discretionary sector, that is 14.56% of the portfolio, and the target is set at 16%. So we need to increase exposure here by at least a bit, and for that we need to pick a stock that will add money into with next month's cash addition. Right now I have 4 names from consumer cyclicals. These are McDonald's, Alibaba, Starbucks and Lowe's. And currently I'm leaning more towards Lowe's, where I would be interested in increasing exposure, but I also would like to check if this is actually worth putting new money into, or if there is another name from the same industry that we could be buying instead. The company I have in mind is Home Depot, ticker symbol HD. So these will be the ticker symbols for today's dividend comparison. Home Depot HD and Lowe's LOW. For the dividend comparison, we'll do 8 different metrics. Revenue, price to earnings, number of shares outstanding, dividend yield, dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. So we'll take a look into these 8 metrics and compare the numbers between these 2 stocks. The better number will get 2 points and the worse 1. Then we'll sum the results up, and in the end the stock with the most points will be considered the winner of this dividend comparison. I hope that the rules are clear, and early thumbs up from your side is always appreciated, and with that out of the way, let's start. So the first thing we are doing is revenue. Here we have Home Depot's revenue for each quarter of the last 5 years, and we want to find out how many quarters of these the company was losing revenue. So back in 2019, Home Depot was bringing $110 billion on the trailing 12 months. Then it accelerated up in the second part of 2020, jumping over 23% for the quarter year over year. It was similar situation for the next 4 quarters. And it looks like that this growth normalized somewhere in 2022, where revenue topped at around 157 billion, but then 2023 it started going down, and we saw 5 quarters in a row where the revenue was just a bit lower year over year. Currently the company is bringing around $155 billion on the trailing 12 months, but they still saw 6 negative revenue growth quarters in the last 5 years. Now let's take Lowe's. So in 2019 they were bringing $71.8 billion on the trailing 12 months, a similar situation where that went up in 2020. At least 1 quarter was up more than 30%, then it normalized in 2022, and we saw the largest 12-month revenue in 2023 with $97 billion on the trailing 12 months, though there is a different story to Home Depot of what happens next. From this top, revenue has been continuously sliding lower. In January of 2024 they had a negative quarter of minus 17.12%, and with 7 negative quarters in a row, the company is currently bringing $83.7 billion on the trailing 12 months. So Lowe's actually saw 10 negative quarters over the last 5 years. Now the next metric we are taking a look into is price to earnings. So in 2019 we had it at around 20, and it was a similar situation for the next few years. The stock price was moving higher, but so was the earnings per share, and PE topped a bit in 2021 at 23.07. Then the next 2 years was some sideways action for the stock price, but in 2023 it started accelerating up, though different to where the earnings went. So the price went closer to what we have today of around $400. Unfortunately, the PE ratio is also moving up now at 27.79. So with this ratio, the stock is currently the most expensive it has ever been over the last 5 years. Now let's take a look into Lowe's, and at first glance it is a bit better. So 2019 we had the PE ratio at 26.71, but then afterwards it quickly dropped closer to 20. The stock price was moving consistently higher, but so was earnings per share. By the end of 2023 we again had a spike in PE at 22.14, but that was again matched in increase in earnings. And in 2024 the stock price was again moving higher, where earnings per share was consistent. And now we see the PE ratio at 21.51, which looks to be quite in line, maybe just a bit to the expensive side over the last 5 years. Now the next part is shares outstanding. First we take a look into Home Depot. It seems that over the last 5 years they have consistently decreased the number of shares out. In 2019 that number was at 1.94 billion shares. The smallest quarterly decrease was in 2021, minus 0.19% to 1.075 billion. But then again it consistently went lower, and now we see the number of shares out at 993 million shares. So over the last 5 years the company has decreased the number of shares out by 101 million, which is in turn a minus of 9.2%. Now let's check Lowe's, and they have a similar situation to Home Depot, not one positive quarter in the last 5 years for the number of shares out. So in 2019 they had the number at 770 million. They did increase the reduction aided in 2022 and 2023. The largest reduction for the quarter was in 2022 at minus 10.4% to 620 million shares. And what we do see now is a bit of a slowdown, but still decreasing to now 566 million shares, which means in the last 5 years the company has decreased the number of shares out by 204 million. And I had to recheck the math a few times, but it seems to be correct. So the company in 5 years decreased the number of shares out by 26.5%, which looks to be a crazy high number, but I'll take it if they managed to do it. Now for the next few steps we'll get more into dividend metrics, and firstly let's take a look into dividend yield. So Home Depot right now is paying $9 in dividends on an annual basis per share, which at a share price of $409.38 is a dividend yield of 2.2%. Comparing it to Lowe's, their dividend is $4.60, and at a share price of $261.06, that is a dividend yield of 1.76%. Now let's take the dividend payout ratio. So what percentage of company's earnings is assigned for dividends? For Home Depot the number is at 52.69%, and Lowe's with a dividend payout ratio of 33.61%. Next metric is years of consecutive dividend increases. So for how many years the company has been consistently increasing dividends. So Home Depot was increasing dividends for the last 15 years. But then if we compare it to Lowe's, they have been consistently increasing dividends for the last 53 years. Now metric number 7 is the compound annual dividend growth rate. We'll take the 5-year average including the estimate for 2025. So for Home Depot the dividend growth rate is 8.45%. But again comparing it to Lowe's, the annual dividend growth rate here is 15.38%. Now the last metric I would like to take a look into is the current dividend yield compared to its 5-year average, and for that we'll use my dividend investing watch list on Google Sheets. So we're currently in the tab for Home Depot. I have the dividend yield information over the last 5 years, and that on average comes in at 2.2%. So the best time to get into the stock was in 2023, where the dividend yield was at 2.79%, higher than the 5-year average of 26.55%, and the worst time was just recently in 2024. We saw the dividend yield at 1.57%, below average minus 28.79%, though currently the stock is trading at a dividend of 2.18%, which is just a bit below of the 5-year average minus 1.28%. So this is the number that we will be comparing. Now let's take Lowe's. Again, we have the dividend yield information over the last 5 years, and in that time the stock was trading at an average yield of 1.7%. Recently the best time to get in was in 2023, where the stock was trading at a yield of 2.29%, higher than average for 34.78%. Comparatively, it was quite bad in 2021, where the yield was 1.15%, below the 5-year average of 32.31%. Though where the stock is right now at 1.74% in dividend yield, we do have it just above average plus 2.36%. So we finished gathering numbers for each metric, and now we can start comparing. which stock actually has the better numbers. So in revenue, Home Depot only had 6 negative quarters over the last 5 years. Price to earnings Lowe's is better, with a lower ratio, and in line to what we have seen over the last 5 years. Shares outstanding Home Depot was not that bad, but Lowe's had a crazy reduction in shares, minus 26.5% over the last 5 years. Dividend yield goes to Home Depot with a slightly larger number at 2.2%. For the payout ratio, Lowe's is better at 33.61%. Years of dividend increases again Lowe's, where they have been consistently increasing dividends for 53 years. Compound annual dividend growth rate Lowe's again at 15.38%. And lastly, dividend yield compared to its 5-year average. It's close, but that is again also Lowe's, where its current dividend yield is 2.36% higher than its 5-year average. So the winning number on each metric is found, and now we can assign points. So the winning number got 2 points and the second one 1 point. The numbers are summed up. Home Depot has 10 points and Lowe's 14. And with these 14 points, Lowe's is considered the winner of this dividend comparison. So it seems that it is now clear. I will not need to add a new position into this dividend portfolio. If nothing changes much in the next 2 weeks, the next cash addition will go to Lowe's, will increase the position and the dividend from it, and also increase exposure in the consumer cyclical sector. Now, if you by any chance would be interested in details of this dividend portfolio, I have a link for this portfolio tracker in Google Sheets at the top of the description. You can check it out or even use it for yourself. It's free to make a copy. All I ask in return from you is supporting the channel and leaving a thumbs up under the video. Now recently I did a monthly update on where we are with this dividend portfolio. So if you are interested in that, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I'll see you all in the next one.
Dividend dreams building